This is Daniela Kamboni for Kitco News, and we're continuing our coverage here in San Francisco from the Silver and Gold Summit. And with me now is Amir Adnani. He's the CEO of Uranium Energy and also the chairman of GoldMining. So we're not talking silver and gold, we're going to talk uranium and gold, the two yellow metals. Again, we have so much to catch up on here. Amir, welcome back to the show.
Yeah, thank you. It was at the PDAC in Toronto in March we last met. And a lot has happened in the uranium.
A lot has happened. So let's start, the price. It was around $21 at the time. We're now at $27. Take us through some key steps here in the uranium space.
Yeah, so the price, as you pointed out, has had a nice appreciation during this time frame. Some of the key developments really have been this ongoing theme about supply reduction. The producers, the larger ones, the Cameco's, the Kazatomproms of the world, really recognize that, look, these uranium prices that we have are unsustainable. There have been stats out there quoted by sell-side analysts that almost 85% of existing uranium mines are losing money at today's uranium price. It's quite a profound stat when you think about it. And so on the whole theme of the cure for low prices being low prices, what ends up happening is you get mine closures. And the most significant one since our last interview is the fact that Cameco announced in the summer that McArthur River shutdown, the biggest mine in the world, was going to be indefinite until we see improved uranium prices. So that's been a very positive development, coupled with seeing new financial players enter the market. A new company called Yellow Cake that was introduced to basically buy and store physical uranium, adding more buying pressure into the market at a time when we're seeing supply decrease. So I think the combination of that and throw into the mix a bit of uncertainty around trade-related issues in the U.S. mainly, and it's become the right foundation to see strengthening uranium prices.
Besides the obvious factors of Cameco and Kazakhstan, how much of the pickup in the uranium space will depend on the pace coming from Japan?
It will matter because at the end of the day, the Japanese restart has two effects, right? It's an ongoing positive psychological impact to see Japan continue to meet its long-term goal of having 20 to 22% of their power be generated from nuclear power. We're at 9 reactors operating in Japan right now, which is much better than 0, but it's still a long way to go of over 30, which is what the country wants to have in order to be meeting its long-term targets.
A lot of people would say, look, it's just really hard to get the full story on uranium because it's such an opaque space. Like, we think that gold is mysterious and silver might be mysterious, but uranium is a whole other ballgame. Would you agree with that?
I think the area that I find actually quite easy to understand about uranium, unlike gold, and as you know, I have great interest in gold. But look, uranium is a depleting commodity in the sense that it is being used and to generate electricity, and you utilize so much uranium per year in nuclear power plants, and then you need more. And so to some extent, the supply-demand of uranium should be relatively okay to understand. Where I think it becomes an opaque market and frustrating sometimes is the fact that it doesn't trade on the LME or some listed exchange where you get a lot of transparency on price. It's really an over-the-counter, trade-by-appointment kind of commodity, and 85% of sales are done by way of long-term contracts. So I think that's where maybe some of the point that you're raising comes in. But otherwise, to understand the supply-demand of uranium, it really is, it's an energy commodity, and uranium is used to generate electricity in a carbon emission-free manner, and that's all easy to get.
A lot of people I've been speaking to saying the stars finally seem aligned for uranium, so I hope for you that does take off. Okay. Let's turn to gold now. Okay. The other yellow metal and your other child, I guess, and your other baby. Are you convinced by what we're seeing in the gold market right now? Do you like the price action?
Well, I think obviously it's all in relation to the strengthening U.S. dollar right now. What doesn't make sense is the fact that there's a total dislocation between the U.S. Fed raising rates and the fact that Europe is still basically at 0 in terms of the ECB, the fact that China is looking at stimulating, the fact that the rest of the world is still dealing with different issues and crises, and meanwhile the reserve currency of the world is the US dollar. but yet the Fed is raising rates, particularly based on US economic data, as opposed to the fact that it's causing vibrations throughout the broader system. So I'm not sure where the story goes. Suffice to say that we've talked about this so many times. I mean, this doesn't seem sustainable that all the US denominated debt in emerging markets, you start to add up South Africa, Turkey, Argentina, India, all of that. You're talking about over 30% of the global economy. We can't just ignore that. And at some point, it's going to end up on U.S. shores in terms of what the ripple effect of all of this will be.
But do you think that the Fed is taking notice of this, saying, given everything that's happening in the global context here, maybe we should reverse course?
It doesn't seem, listening to the latest speeches and talks and minutes that they've been given, that's been documented, and I think your other speakers have pointed to, doesn't seem like they've fully recognized or appreciated that. Let's see what happens in December with the next meeting there. But look, the market's changing all the time. Data's coming in all the time, and we're seeing the volatility in the month of October live in front of us. They're probably looking at the exact same thing. And so I just can't help to think that the setup today for gold reminds me very much of the setup in late 2015. And we all know the spectacular run that we had in the gold market in 2016. Of course, some slightly different drivers, but very similar setup to some of the previous bull markets and rallies that we've had in gold right before those have happened. Many similarities that you see in various data points in the market today for gold.
Amir Adnani, thank you so much for your thoughts today on uranium and gold. Thank you.
Great to be back with you. Thanks, Daniela.
Thank you for watching. We'll have more for you on Kitco.com.